The world economy is going to hit the biggest financial headwind since World War. What can you do? My whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers. Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think even a PhD, that's all you need.
And unfortunately, too, if they don't see the world the way it really is, they assume the solutions that are presented to them by the central planners and the politicians, they just take that at face value, is that, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich and we'll just let the politicians take what they want and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. You know, what we want to do is we want to make the poor and middle class, we want to make them richer. And for whatever reason, well, it's because those people don't have that financial education. They assume that the way that you again, bridge that gap is by taking from one group, as though somehow there's like this fixed pie. And we have to realize that in free market capitalism, and that brings up the quality of life for the people at the bottom.
If you study Marx, Lenin, Stalin, Hitler, and Mao, the central bank is Marx. And Lenin said, if you want to destroy the economy, you want to destroy capitalism, debauch the currency. So in 1971, just before I went to Vietnam, Nixon took the dollar off the gold standard. But they don't teach you that. You see, our system is communist. And I hate to say that because I'm a Marine. Like I said, my family were locked in internment camps. And today they're talking about reparations for the blacks. I mean, give me a break. My family didn't get reparations. They took all their land, they took their houses, they took everything from them. But what history doesn't tell you is that Hitler rose to power on reparations. So stage one would be socialism, which we had in 1933, FDR puts us on Social Security, got welfare, Obamacare, and we have so many Americans without that government stimmy check. We're finished. So in 2020, I'm not a Republican or Democrat, I'm not endorsing Trump, who's a friend of mine, or Biden. I'm saying communists took over in 2020. And the fractional reserve system and bank reserve currency, which is macro, that's where the heist took place. So that was Social Security, everybody's now on Medicare, welfare, and all that. We're now a welfare nation. Let me just say this much. Markets go up, and markets come down. It's coming down. And then we're going into depression, and then we go into revolution. Depression is when more jobs are lost and they're going to have to print more money. Just as they did to prevent when Fauci, fascist Fauci shut down the U.S. economy, the whole world economy is shut down. America is now the largest debtor nation in history. Student loan debt is out of sight. Consumer loan debt is out of sight. Stock market is all based upon debt. I don't know the exact numbers, but I think we're pushing the debt to GDP ratio. Okay, with the debt to GDP, it's really simple. When debt to GDP hits 90%, so we have 90% debt to GDP. That's pretty optimal. That means every dollar you borrow, when it's 90%, the economy grows by 10%. So it's a 10 to 1, a 10% ratio. Today, the debt to GDP ratio is 140%. They cannot add any more money to it. It's not going to grow. That's what it means. Well, the reason this is happening is because we're no longer a capitalist country. A capitalist country lets the inefficient fail, but the Fed and the Treasury bail out the incompetent. If inflation is in asset prices, like the stock market, real estate, we make fortunes. But the working guy out there working for $50 an hour or whatever they work for today, he just took a haircut. Then he can't afford to live. And then you have the southern border right on our border right here, wide open. People are coming in droves. They have smash and grabs. This is all stage to communism. It is so screwed up, I can't believe it. America was really formed in 1773. It was called the Boston Tea Party. And now all they want to do is, I couldn't believe Biden saying, we're going to raise another $10 trillion, but it won't cost us anything. How stupid do you have to be where you get this guy Biden stands up there and he says, we're going to spend another $10 trillion. I'll tell you how much a trillion is. If you spent $1 a minute, it would take you 32,000 years to spend $1 trillion.
Yeah.
It takes them a minute to print $1 trillion. But our schools say to go to school, get a job, and get a 401k. I'm going, oh, gag me. I mean, I would never do that. But if you had bad teachers or poor teachers or your parents said, that's what you do.
The game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up. Right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81 adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
But something even worse happening is the last crash was, let's say, 2008 when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market. Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah, and my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
You see? And so how can I get my cash flow to cover these things? So then I know that I'm never drawing my savings down. And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
Yeah, that's a cash flow game. Out of the rat race, all this stuff, you got $10,000 a month coming in, you got $7,000 in expenses, $3,000 net, you're free. And there's tax breaks for it.
The cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff, produce more stuff. So if you're just taxing the people who are producing, that defeats the purpose.